The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 23rd day of July. And let's see, Dow is down 14 at 17,836. S&P is up 90 cents at 21.15. You've got the comp, oops, where did it go? You've got the comp index up 23 at 51.93. You've got gold up at $1.60 at 10.93. Very interesting chart pattern. We'll have to have a look a little later on. The silver's unch and platinum's down 5 cents, but you've got high-grade copper down 3 at 2.39. Now that I have to look at right away. That is, where did it go? Oh, right there. Okay, at HG. Look at that. Remember we discussed this H pattern? Remember yesterday we discussed, I can't believe it, how these patterns work. Look, we discussed this Chapman wave Roman candle from 3 weeks ago, that if the, whatever it is you're looking at, if it trades into midway of the wick, the lower part, that's from the body down to the lower part of the wick. If you get into halfway into the wick and you start trading there for a few hours, in this case it was yesterday, there's a good chance not only will you test the low, in this case it's 2.38, but you will break the low and then you have to get back almost immediately. Otherwise, it's a real problem. So this is a high-grade copper. Wow. ESU, let me just show you the ESU right now. There's the arch formation in the 120-minute chart. It held the low. There's going to be very, I always talk about the fight, but there are only 3 patterns in the stock market. There's the cup formation, and that could be also a V-shaped formation. There's a slight difference in the outcome, but basically the same. They serve the same purpose. You go from the left side high bar, you come down, you go back up, and you test the left side low bar. Sorry, the left side, which becomes the high bar. Right now, the other way around is the V-shaped pattern, the inverted V-shaped pattern, or the arch formation. Same principle. You're coming from one level, you rally up, and then you come back and you test the left side low bar. Or you go in a straight line. Look, here's a straight line. That single leg A up, what happened to be B in the S&P futures. So far, it's holding very well. Why? Because if there was a trade for 3 to 5 hours in the 120-minute chart in the 2086 area, we're 2108 up 25 cents right now, that would suggest that you're going to have a failure pattern. You can go back 66% or even all the way to the bottom again, 100% correction. So, and not only that, you've made a double top in this particular instance, 21, 26, 25, back in April, what was that? That was May the 22nd. And just recently, 4 days ago, you tested that high, 21, 26, 25. Makes it an important level, and you've got your cup formation in the 120, which turns into an arch formation. It broke in the chance of a left side, right side price time match. So that suggests we can take that away and turn it into yet another chance. Just a chance, I'm saying that there's a chance that you could produce another soft W formation, U formation, and that would be very important. U formation, it doesn't sound like a good word to me, U formation. All right, there it is. So we've got levels to watch, very specific levels. Now I want to go to the TLT. Look at this. TLT down 6 cents at 119.54. I've said that until it gets to the 121.30s, let me double check what I said in my newsletter. Yep, 121.50s. You have to consider this is just a retracement. But the moment it starts to break above 121.50s and 121.74 becomes the magnet of the 200%, the 200 exponential moving average, the daily moving average. MACD is improving. Stochastic is at 68%, not at 80%, but it is rallying. So we'll see, because 118.50 to 118 is the key support on a short-term basis for the TLT, which is the Lehman 20-year T-bond fund. And you've just got a leg F in the daily, in the 120-minute chart. I'm going to just double-check this. I don't want to give you information that's not correct. 118.89, 118.93. Yep, that's a D. That's an E. And this is a potential for an F, and this is recycled, but we'll treat it gingerly right now. MACD is still good, but turning down at 87%. MACD is still good, but it hasn't crossed negative. The stochastics at 80%. And this last rally didn't have the same strength. Okay, a couple of things that we want to do now. We want to look at the dollar DXY. DXY. Same as it, no, of course it's the same as the TLT, because I didn't put the dollar on. It was the TLT. Okay, there it is. So now you've got a potential for a peak F/A in the daily chart. What's really important is the MACD is still very strong, but turning down, but hasn't crossed negative. Stochastics at 80%, having gone from the, what was that, 86% or something like that? Oh, it went to 94%, and now it's at 80. That was a quick drop. So I'm going to watch the dollar closely, because the weekly chart is still suggesting that you've got a cup formation, having made the arch formation and broken to a new recovery high. That's above the peak A on the week of the 29th of May at 97.78. All right, so let's get out of this, and we're going to look at EUR, USD currency pair. Trying to rally off the low that was just made at trough D, but that arch formation in the weekly is the one that we have to watch, because if at 1.09 up just 0.04, if the euro-dollar currency pair is not able to cross 1.107 to get above the 9-period exponential moving average in the next 3, 4, 5 days, that's just not going to be good at all. Okay, now one other thing that I want you to do is I want you to run through just the QQQ series. The QQQ series bumped into that Chapman wave repellent zone right there, but it hasn't done much. It's just gone sideways for the 2 days. And the weekly chart is the one to watch in leg D. And this is interesting. The on-balance volume has gone to a low. The stochastic made a V-shaped turnaround in the weekly chart, and the MACD is turned and is trying to cross positive. That would normally say we're about to start a brand new up move in the QQQ series. But if it deflects lower, that's just going to say, mistake. That was a right arm extension in the Chapman wave methodology. So all I'm doing here, I'm not doing anything with the Qs, watching it real closely. Now we want to go to the SMHs. Had a huge drop yesterday, and now a very sharp spike. I think it's one of Sandisk or one of those stocks to the upside, and it's up 1.26 at 52.96. And the weekly chart went right to the dash trend line support. Yeah, I can see a little bit of a bounce here. I have to just call it a little bit of a bounce, because at this particular point, the weekly and the monthly charts are suggesting that if there is at 52.96, up $1.26. If it takes out 50 as key support over the next 3 to 7 sessions and then closes down there, that's not good at all. Request to look at Sharp. Sharp is acting quite well. This is an IPO that came out called Shopify. Single leg A up in the monthly chart, single leg peak A in the weekly. A sharp pullback from that opening gambit, and it's holding the 200-period moving average. I'm going to make it real simple. I don't know if you're long. I don't know if you were short. All I'm going to say is, if you are long, you want to see by tomorrow at the latest a push above 34.66, preferably a close above 34.66, and then at that point, I would say leg A, peak B, leg C. That the stochastic needs to be in the 80% to say that it's going to make a U-shaped move that's going to take out the high of 34.97 on the 1st of July. Once it does that, it's just a stair-step move to the upside. The question is, would I buy it right now or would I sell it? I'm going to say as an IPO, having made that huge move to the upside and now just trying to find a base, I don't know much about the fundamentals, but I'm going to make the suggestion here that if you aren't in the position and you want to trade it, treat it as a trade, because the 120-minute chart has gone to peak A, B, C, D, E. I would prefer to wait for a little bit of a pullback closer to 33. Why? I want a better risk reward. Well, that's what I would like for the entry. But on a trade, you really don't even want that. If you're in it, you want this to go quickly above 34.66. So how can I phrase this? Yes, you can get a small position here, but the market is becoming much more vulnerable to a decline. And as such, my recommendation is to have it light. There are a couple of stocks that are going against the grain. They're looking very good. But at this particular point, I have a very small position on the long side, and I just treat it as a trade and more a practice thing to see how sharp acts and reacts during market, a little bit of market turmoil, and is it worth adding to it? And I'd only add to it if by, today's Thursday, if by Tuesday into Wednesday morning, it is not closed under 31.17. Let's just make it real simple. And if it hasn't done that, this is really good action, and it could try to for the 36 level on the next rally that it has. All right. Now, so I think I've covered everything that I wanted to cover over there. What I want to do, I was talking about the SMHs. I didn't finish my thoughts. The SMHs, I don't think this is a good-looking chart at all. And I did say that if it closes under 50, that's a real problem, both in the weekly and the monthly. But on a very short-term basis, we've got to see at 52.92, up $1.22, we've got to see if it's able to crack 53.97. That was a high on the 15th of July. If it's able to do that, it does have a chance to hit the 9-period exponential moving average of 54.92. Let's call it 54.90s, and that should happen fairly quickly if it's going to happen at all. My thinking is it's going to make an arch formation and fail way underneath 54. That's the way I'm looking at it. Okay, now, and I should mention we are short the SMHs. We are short via one of the instruments. It had a huge gain. It's given back some of the gain, of course, with that big spike up today. But still, we'll see what happens. And I just want to look at the XLF. Now the XLF is giving some of the gains back. It's at 24.48, and the stochastics at 93%, and the MACD is still good. This is going to be very interesting. Why? Because within the context of breaking to a new recovery high, this is potentially leg E in the weekly chart, and I don't like messing around. This is a G or G/B in the 120-minute chart. Holding pretty well, but that monthly chart is still fabulous. And technically, the weekly chart is good, not great, but it's good. The technicals are not, they are confirming this recent rally, but they're not giving me the stochastics at 68%. I really want to see it above 80% to sustain that move. So, Basil Chapman, Tiger Technicians Hour, and I'd love to get your calls at 877-927-6648. And we'll have a look at the VIX when we get back, VIX.X. We'll be right back after these important messages. VIX is at 11.88, down 24 cents.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Mentioned in the den were a couple of stocks which are really worth looking at here. I know that a number of Tigers have them, and I'm just going to do this. We need to call that A with an almost instant restart. There we go. Okay, so what we've got is Ambarella. And Ambarella does something other that has a connection with Apple. I think they make some of the technology or some of the parts, and it is acting beautifully. It's at an all-time high right as we speak at 128.77. Leg C in the daily, MACD and stochastic are really excellent. The weekly chart is in leg E. Technicals, MACD is good. The stochastic's just struggling. That's a counterpoint move there. But the weekly chart, sorry, the monthly chart is in. So that really was an F. This is G/C. Wow, this is strong. And yeah, and the 120-minute chart is a little extended. If you're long, hey, congratulations. And looking at Amber. At 128.47, up 595. I don't know if they came out with any earnings or anything, but this is fabulous action. I like it. In a market like this is one of those stocks that could ignore for a little while longer any weakness in the general market. Dow is now down 41, S&P's down 2. Our bias has been to the short side here, even though we do have a couple of longs. But this is the issue here, is that it's selectivity. And you've got just a couple of leaders. And even in the IBB, there are just a couple of stocks that are left to give out earnings and stuff that are going to their leg D, etc. So Amber is actually acting really well. Would I buy it right now? As a trade, I would say based on the 120-minute chart, if it had to pull back these 5 points that it just added today, I would say I'd nibble on the wrong side, wait for leg D, and at D, I just, as it crosses peak C, if that's what's going to happen here, I would just raise the stop, and it'd be a short-term trade. It could be hours, it could be days. My thinking could be 3 days going into Tuesday, but be real careful. Would I short it? No. One of the strongest stocks in the market like this. There are so many others that are good. Let me do this. The other one was, did I forget it now? It was, I wanted to look at, see, John gave a couple of names, and I thought they were really good to look at. GoPro, GPRO, GoPro, right? Where did that go to? GoPro, I don't know why it does that. I must find out. GoPro, leg D in the daily. The technicals are still very good. Leg D in the weekly, but is under the 98.47 major high that was made back in October of last year. It's up 2.57, up 4% today at 64.24. My thinking here is it's exactly the same thing. If you are long, you know what I would say is if you are really looking for the upside and you're looking for the very best stocks, these are still the stocks that on any bounce in the market, these will do better than the general stocks. So if you want to just take a little position here because you haven't got it, I'd say, look, the AD is always a little dangerous, but the way the stochastic is holding, the way the MACD is, GoPro, GPRO, I think can go higher. I would put the 65, 60 to 66, 43, somewhere around there, and then I would say either take off the money if that's what if that's a short-term trade. Longer term, I'm going to say to you, if you're able, if you have the stomach for it, I would treat some part of my position as a potential buy and hold, but only part of that. The other I would definitely treat as a trading vehicle. Now, I might be telling you something and you look at me and say in 3 months' time, are you crazy? Remember you told me to take something off if I had my whole position. It's trading at 105 and look, hey, this is just money management. That's the only way I can do it. Or sell some calls against it, J&J says in the den. That's a little complicated for some people, but that's really another way to go, absolutely. Now, let's just do this. The question about AAL, American Airlines. Now, American Airlines has had a nice spike today. So did, what was his name, Love, the CEO of, I think it was the CEO of Southwest Airlines. And he gave a really good outlook. I'm looking at the charts and I'm saying, hey, you can give whatever you want. Oil crumbles and tumbles, and I've got a sell signal, not yet a sell mode. It's real close. We'll know at the end of the month. In American Airlines monthly chart, definitely in the weekly chart, I'd be really careful. If you're long, treat this as a bounce. And one of two things. If you got in just the other day, I would take something off right now, and I'd keep the rest, and I'd say, you know what? If you can rally and break 44.26, you're at 42.81 AAL, great, because then you've broken the 200-period moving average. But this looks like one of those news-related up spikes, and it looks like it's going to come back and test 41.45. If AAL breaks this support right here, 40.44, watch out below. You've got yourself a lower H going to a second H. And if that takes out 40 support, it'll retest that low. I don't like this at all. I might be wrong, but that's the way I'm seeing it. I'll be right back. Basil Chapman, Dow's down 50, S&P's down 3.5.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. I just wanted to do a couple of little technical things. You know, we're all about technical analysis at TFNN. When this arch formation was forming, you remember in the Chapman wave, we look for the lowest, most obvious low bar in the futures, and actually for a long time now, what I've done is I use the left side low bar. As long as it's not taken out, that can remain the base where you can start your wave count, even if it comes back to it. If it takes it out by 1 penny, it's not good. Okay, so here we've got the futures, the E-mini. This is the 2-minute chart, and it goes from 2104.25, and it rallies. It goes peak A, and then it pulls back, and then by 25 cents it takes, that's the trades in 25-cent increments, takes out 2106.50, starts leg B. This is called the floating letter. So that's B, that's B, that's B, that's B, 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 and then all of a sudden, that can't be B, that becomes peak B. Why? Because there was a lower high bar. That's how simple the technique is. So you take out peak B by 25 cents, you start C. Whoops, you go to C. C pulls back, and then it goes to D. At D, that's where you expect a lot of things to happen, and it does. You turn around at a 21.1375? No, 21.1025. You turn around, you come back, and what do? You make that H pattern. You remember the market is made up of arches and cups. They could be V shape if they're straight up and straight down, or so 3 techniques: cup or arch or straight line. All right, and part A to the cup is a V-shaped pattern, and part A to the or B, let's say, to the arch is an inverted V. And then what happened is I drew in From peak C, you want to go from the left side high bar to the lows, and I drew a line down, but I also took from D what I call a plumb line. This is a plumb line right here. And that's the midpoint. And at that midpoint, you learn to do it visually as well. But at the midpoint, I looked for a price time match that said that at 28 minutes past 11 Eastern Time, the E-minis, this is the September E-mini, should be testing the 2104.25 level. If it takes it out, you've got that bar or the very next bar to break and reverse above 21.025 and then try to get to the left side arch or a 9-period moving average. This is a naked chart. I've got nothing but the candles and my notation. I put in the arch, etc. after the fact to show a technique, but there is nothing here on the chart itself. And then what happens? It pulls back, and now it's struggling. It's taking time. It hasn't gone within 2 bars, and that says, oh, you're going to have to test that 2103.25 level again, because if you take that out, we could start using measured moves to the downside. So I wanted to show a little bit of technique here. Whoops, I just took it out. And here is the S&P cash. This doesn't trade. There's that gap overnight, and this doesn't trade. And then it gaps out, pulls back, and it goes to peak A, B, C, D, turns around and comes back, and it's just taken out the left side low of 2110.11 on the cash. We're at 2109.79. Thought I'd take a moment just to show some techniques. Next thing I had was a question about a number of people have asked me emails and stuff about the transports. How do I explain oil coming down, yet the transports are weak? Because the transports are made up. This to me, remember I spoke 5 months ago, maybe, I said I believe that we're in some kind of a recession that's not going to be measured as in a traditional way. I don't know how it's going to be measured, but it won't be measured in a traditional way. And that there's a good chance that we've seen some kind of a rotation that says that in the job market, yes, there have been jobs, but the jobs have been jobs that aren't producing the economic results that you'd expect. And that's kind of what I think we've seen. So now what's happened is that there's the arch formation about to form in the transports yet again. It's going to be very important because you could get a right side support level at about 146.50, and then it could try to rally again. We saw oil do that in the arch formation going sideways before it broke down. So, but the stochastics at 82%, that's good. The MACD is good. Histogram, the vertical line's good. But the price is not really, the price in this rally should have gone above 153.15 in the IYT, the iShares of the Transportation Average ETF. So at this particular point, it's not that. It's not the daily. In fact, if you look, the real issue is you've got to look at the major tide. This is the Indian Ocean or the Pacific Ocean. This is the larger context. That turn down in the MACD of the monthly chart and the stochastic down at 40% is saying that there is a tidal change in the larger outlook of the transportation index. It is showing us that crude oil could not help the airlines, that crude oil has not helped the truckers, and that the trains are not shipping as much as they had. It's one of the reasons we had a shipper as a small position in my opening call, and one of the reasons why it was holding one, I said, I don't know how it's holding, but it's up for us. And then we put a stop in a tad below our entry point, and we got taken out, and that made sense. I just don't understand how the shippers could do it. So the same thing with General Motors and Ford, etc. So I don't want to take time now to talk about tomorrow's Technical Friday. We'll get more into GM and Ford, etc. But I do want to go to that. So the monthly chart is saying that if this candle of October, the 137.05 is taken out, that'll be the first internal damage to the monthly chart that we've seen since this incredible move in the transportation index, since it broke the 9-period moving average. It really started back in January of 2012, but it retested that 9 EMA, and then finally it broke out in December of 2012. And since then, it hasn't even touched, except for October, it hasn't touched the 9-period moving average until it made peak F at 167.80. If you know anything about the Chapman wave methodology, you know a monthly peak F. You remember 2007? We got a monthly peak F in the Dow. well, you've got to be careful here. But it has used time rather than price. So at this point, I feel very comfortable by saying I would still consider this a rectangle formation. No big deal after the massive move to the upside. Just don't break 137. On a close under 137 will be really negative. So, okay, XIV, I had an email asking me about the XIV. I think that's a great thing to look at. Why? It is the VS inverse VIX short-term ETN. Everything about the chart in the monthly says the price is holding well, but the MACD and the stochastic are underperforming, and that this candle that we're looking at right now, with what is it, a week and a day or something to go before the end of the month, this is a very important candle because 39.87 on the XIV, trading at 48.36 right now, up a penny. That is a long way to go. That's 9 points to the downside. But you break, not you, the XIV breaks 36.95. I have to respect the low bar. So 36.95, you close under 36, and that's serious stuff. But in the meantime, 40 to 39 is really support level to watch. And this is what I want you to do, just to show you something. You see, this is the XIV trading at 48.34 under the 50.10 all-time high of 24th of June. I'm just keep looking at this. I'm going to put in the S&P right here. Just keep looking, keep looking. There's the S&P, different chart. Now, why am I a little bit worried about this market? Because, you know, the pattern that I always talk about called the single leg A syndrome? Why do I call it a syndrome? I mean, well, come on. I call it a syndrome because there's a internal characteristic that says once in a while, I don't want to take the time now, maybe if I remember tomorrow I'll do it. Once in a while, you get a single leg to the A side, to a leg A that goes to an all-time or recovery high. So it looks like it's a brand new buy mode in the Chapman wave. Why? Because you've gone from a new low to a major rally, and that major rally is taking you over in this case, it's taking you to all-time highs. Okay. And in this case, the S&P went above the 2134.72 level. No, it didn't. It went to 2132.82. That's right. I drew in the trend line. It didn't break it. And this says that there could, even if it went to a new A, which I'd have to color blue instead of gray, it should be gray because it's a retracement failure mode. That's an explanation. That's not a derogatory term. It says that if the S&P at any point in the next 3-4 days trades under 2100, is it 2108? You've got to be careful that the single leg A, I'm going to have to show it. Look at this weekly chart of the I'm going to do the Dow because it's the one that's freshest in my mind right now. Back in 2000 and there we go, 2007. You remember when we made that top? Oh, this one's not notated. Where did my notation go? All right. Well, you remember we made that top back in July, exactly 5, 6, 7, 8 years ago Are we in 2015? Yes, we are. And that's 2007. Feels like so long ago. 2007. But it doesn't feel like that long ago. At 14,021. And many people thought, okay, that's it. It's all over. This is the end of it. And I said, gee, my monthly chart is still acting well. And there's a chance that we could get what I call a single leg A up in the, I really called it the double camel hump, where the stochastic makes a rally, pulls back, and then has one single move up, and then doesn't hold for more than 5 or 6 bars above the 80% level, and it gives it back up, and the MACD deflects lower. And that's what we had from that move back in August of 2007 to that doji candle high, all-time high at the time, of 40,198. And then it pulled back. That's like a single leg A. See, that's AB, but basically it has the characteristic of powering higher in a powerful move with very little time, like one bar that barely shows up. So now let me show you something else. The characteristic that I'm looking at here, XIV, has the same pattern. Look at the stochastic. It not once did it have a little pullback at all. It just kept going up till it crossed right there, starting to cross negative at 94%. 94% is very good. But wait a minute, this has the characteristic of, look, one day of rest and then it's boom, new high. One day of rest, boom, recovery high. So now this says you can draw in this particular pattern. And it's just a warning pattern. It doesn't say, hey, this is the most fantastic technique. It works every time. Watch out. We're going all the way down to under 4650, which is the 9-period moving average. What it says is, be careful. There are other factors here. And the MACD and stochastic have rallied quite strongly. But the MACD hasn't got the same power that it had before when it was going to highs. It's making lower lows, in fact. It's just the stochastic, which really follows the price movement, if you know about the stochastic. And what's happening here is it's saying just be a little bit careful, because if the XIV, this is the XIV, if the XIV starts to take out these key support levels, you could start to see lower highs and lower lows. And that was really an important factor. So the monthly chart has already made a peak F, all-time high, in a cup formation. This is just a beautiful formation. Remember, I talk about this. It's the old Sears Holdings pattern, because not many people know what I'm talking about. So let me just say, there was a time where we were quite ready to short Sears. In fact, we might have shorted it. And then I noticed that there was an H pattern right there. And this is XIV, but it's the same pattern we're talking about. I noticed that the stochastic and MACD was starting to rally instead of break down. And what I had said is, if there is a rally that takes out the left side high bar, it's a technique that I've been looking at for 5, 6, 7 months. And only now am I actually prepared to trade on it. And that is that the H becomes a powerful move for a cup formation to retest the previous high. And we've just seen that. And in the Chapman wave cup and handle breakout pattern, you expect to go to a D. Well, this went to an F, pulls back. So this is a period where as I say, our portfolio is weighted to the downside. We've added nothing today. We added to it. And I'm just going to let the market play out. I'm looking at a lot of signs that are saying that there is a good chance that some of the favored sectors, some of the really best sectors here, I heard John Logan's been talking about the XLV for a while, as if when he was looking at strong stocks, strong sectors and weak sectors. And look at this. It's got the same characteristic we were talking about. If I make this an alternate count, and sometimes you have to in the Chapman wave. Hey, the idea of the Chapman wave is to give you the very best opportunity to trade based on chart patterns that repeat over and over. Remember what I was talking about before? That kind of rogue wave went to the upside to a peak A or B and then fails. That was that move back in 2007 in the weekly chart of the Dow. Well, look at this. This is a peak F, and you pull back and you start a brand new move that takes you to a new high. The MACD's at 89%, and the MACD's always say that. MACD is good, the stochastic's at 89%. However, when I'm looking at this, I'm saying, look at this potential for a double top here. Yes, you could go a little higher. I'm quite prepared to draw an arch formation here and then say, what if, even though the stochastic went lower, the MACD held quite well, what if this really started the new move? And this is an A to a B, and we didn't break that low, so this could be a continuation pattern, and that could be a C/A to a D/B. It allows for an E, a little spike to the upside. So I'm looking at even the very best sectors becoming weak.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Hi folks, just a little time left. There are a bunch of things I want to look at. I said I'd look at the VIX, but let's first do this question about Citigroup. Citigroup, they always change the name. Citigroup. Leg D in the monthly, leg E in the weekly, leg alternate count, it doesn't matter. This is a single leg A to the upside, acting really well. It's going to be very important with a stochastic at 95%, MACD good at 60.17. How it holds, if it does have a sharp pullback, a close below 58, just 2 points lower, would suggest that this is a single leg up and it's going to fail and the stochastic will go under 80%. At this point, it's acting well. If you're long Citi, I would just, you know what, you could take a little bit off and raise your stop on your core, and that just to be safe. But so far, it's acting very well. The XLF, maybe an engulfing candle. I got a PG in the 120-minute chart. This is an alternate count E/A. We are long. I'm going to raise the stop. I don't want to mess around with this. If it's not going to work now, this is a test. Now, I wanted to do this real quickly. The VIX. So XLF closes under at 25.37, closes under 25 in the next 3-4 days. It's over for now. It's a real problem because that was one of the leading sectors. The VIX index, let me just get to that. The VIX index has been so sluggish. It is just showing signs here on tomorrow's Technical Friday. I'll spend time on the VIX, but at this particular point, that basically a single leg up to a lower low that occurred in the VIX index in the weekly chart. I want to talk about that because this has a certain characteristic that can turn into something very, very powerful. That's number one. Number two is in the VIX index, it made a peak here for 20.05. It plunged to the 11s. That's like what is it, 55? What is it? Yeah, that's almost a 10-point decline. I mean, that's huge. So this is what I'm looking at here. The VIX index, make it real simple, at 12.42. A bear phase is where all news, no matter whether it's good or bad, starts to impact all the stocks, even something like the biotechs, which have been on fire. That says every day you should have lower highs and lower lows, and then that final rally at 3:15 in the afternoon, looks like, which everyone says, oh, great, now we've turned the corner for tomorrow, closes at the low of the day. That's the characteristic, and that's going to take a little while to come into force, but that's what I would look at for a bear phase to really kick in. On the upside, at the end of the day, it would be fantastic if the Dow only closes down 35, S&P closes up 2, and you've got the VIX at 11.30 or something. I think this is a much more serious period that we're in. I think we're about to go down. So I just wanted to get those things out the way. I'll send emails. I'll answer them tomorrow, Technical Friday. Most importantly, what I wanted to say is I still believe very strongly that in some of your best stocks, this is not a bad time to take something off, reward yourself, get that money ready to put back on whatever it is, a major downturn of 8%, 10%. Put it back, even if it goes down 15% afterwards, you're still 5%, you're 10% better than you were, okay? That's just all I'm saying. I think it's time to be a little bit careful in terms of looking at the overall picture, number one. And number two, it is so selective now that if you've got the stocks that are working, this market could very easily turn very sexy stocks into the unwanted for a long period of time. So just be very careful. That's my advice. Now, a couple of things as we're about to wrap up. We've got a great program all the way through the day today. Stay tuned. You've got a program until 6 o'clock. You've got Daryl coming up. You've got Steve coming up. You've got David coming up. You've got Tom O'Brien. You've got Andy. Just the works. You've got everybody today. Have a great day, and I'm going to do two things. As I sign off, I'll be away next week. I'll do tomorrow, and for any new subscribers, I've sent out how to read my Traders Corner, and if there's ever a mistake that I pick up before the opening, I quickly send out a correction, and today I did send out a correction. It didn't affect anything, but I did send out a correction. So Dow's down 84, S&P's down 8.5, and thanks for being here. Have a wonderful day. See you tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.